Good morning. Welcome to the live stream. On this live stream, we're going to go over stocks and take a close look at stocks, looking at fundamentals, looking at valuations, and also looking at technicals. With me is Daryl. How you doing this morning, Daryl?
Doing very well, Victor. Good to be here. Thank you.
Yeah, it's been an interesting week. We've seen a rotation out of these big caps, and the capital is ending up in places that we tend to see be safer places like consumer staples, real estate, even energy had a pretty good day yesterday. So we'll see if this continues today. We're all leading up to the Federal Reserve chairman is going to have a speech tomorrow, and I think everybody's somewhat bracing for what's he going to do and what's he going to say. I think my my bet is that he's gonna have a speech similar to the last ones. He's not ready to act. He's not ready to do anything big like 50-point rate cut, maybe a 25-point rate cut, maybe no rate cut. And he just says that, hey, we still got some problems, A, B, and C, and we're gonna keep being data dependent. And the market's gonna be like, wow, that was a nothing burger. And between now and the time he does the speech, I don't know that we're going to have a lot of volume. Wouldn't be surprised if we sell off a little bit more today, just to kind of as investors are taking some profits out of these big caps and maybe putting some capital off to the side, keeping it safe. But we'll see. We'll see how things trade. Stock market opens in about 28 minutes. We've got a pretty let's call it flexible agenda for this live stream. We've got a couple stocks that we had in mind. We're going to go over Walmart. It announced earnings this morning, and then we've got a couple other stocks, including Palantir, Opera, Novo Nordisk, and then maybe Daryl's got a couple he would like to go over. But early on, we wanted to go over some reversal charts that Daryl kind of picked out, and it kind of shows that yesterday we had a lot of action that I think is interesting to cover within the market. So we'll start there, and then we're going to come back and check out Walmart. So let me let Daryl take the stage and kind of show us what he was seeing with regards to a reversal yesterday.
Okay, so we'll go through these relatively quickly, but this is Agree Realty, so it's a defensive stock. And one of the things I noticed over the last 2 days, we've of course had the sell-off in the big tech and discretionary areas and a pickup in healthcare. I think healthcare and real estate has been in the top 3 to 4 sectors over the last couple of days. But yesterday, when I was scanning the charts between around noon and 1 o'clock or so, I started noticing a bunch of reversal patterns. And basically, what those are is when you have a lot of buyers driving the price up, and then sellers come in and drop the price back down. This one is called a shooting star. So this is a defensive company or a defensive investment. Had a lot of strength yesterday in the morning and then started pulling back. So looking at one chart, that wouldn't have been that interesting. But here's Amazon, exactly the opposite. This one had strong sellers in the morning and then buyers throughout the day. So that's a reversal pattern. When you're in a decline and then all of a sudden you get this reversal, it can lead to more upside. Look at this candle here compared to this candle. So we were in a downtrend. We printed the same kind of candle. Let me see what that one's called. I don't have all of these memorized. It's called a hammer. Okay, so we printed a hammer here, and then we went on this, basically this, increase here. So just another reversal pattern. These all happened yesterday. Here's Citigroup, which is in an aggressive area, finance banks. They did the same thing yesterday. We were in a slight downtrend, printed that candle. Looks pretty similar to this one. We ran up after that. I think we could be where we're starting to reverse here after this 4 or 5 day decrease. Here's another one right here. And then we went on a really good run from there to here. So we'll look at a couple more. Google did the same thing. So it's been selling off for the last 3 or 4 days. Printed that same kind of handle or candlestick. If we look here, we can see it printed the same kind of candlestick and then ran up. This one's not quite as pronounced, but a very similar type of pattern. Here's another one, ran up afterwards. So those are kind of interesting to watch. And these all happened yesterday. That's what really caught my attention.
Mm-hmm.
Here's J&J in the healthcare. So they were in the defensive, and they printed a shooting star yesterday, which means we're probably rotating out of those defensive, or starting to rotate out of those defensive back into more aggressive groups.
Yep.
Here's NVIDIA, same exact thing. We look back here, we printed the same type of candle and then had a run for 6 to 8 weeks. Here's another one, not quite as pronounced, but we had about a week and a half run.
Mm-hmm.
Okay, we'll look at maybe just a couple. Well, we'll look at PFE. I think this is my, oh, we have 2 more. Here's another healthcare shooting star. Means you're in an uptrend. Lots of buyers early in the morning and then sellers through the rest of the day. Then we have
Interesting.
Palantir, same thing, 6 days of downward days, and then printed this reversal candle.
Yeah, Palantir had a big move. It was down substantially for a while, and then it closed down only like down a 1.5%.
Yeah.
But I think I glanced over there throughout the day. It was down like upwards of 7%, and it was down 1.1% at the end of the day. So it shows that there was some buyers that came in and lifted the price.
Yep. Then the last one is the Qs. So here's an ETF.
And what does the Qs represent? Which index?
NASDAQ 100. So it printed the same kind of pattern. If you look back, here's the same pattern. Then we had a run up. Here's the same kind of pattern and a run up.
Mm-hmm.
So anyway, despite all the headlines that I saw yesterday, which was everything's crashing, these reversal patterns were all over the place yesterday. Either on the bottom side, reversing back to bullish for aggressive groups, or on the defensive side, the reversal pattern was that we're going to be pulling back in those areas.
Yeah.
Just kind of fascinating.
And we're in an expensive market. So if we get some volatility, some sell-offs, it's a little bit of an expectation for me that, hey, we got to let some air out of the balloon. It can't just keep filling. It's just going to pop someday if we keep letting it do that.
Yeah, we are in an expensive market. I'm looking at 20 years worth of data here, and you can see we're at the top end of the trend channel on the S&P 500.
Interesting. And right there where going back a ways, you see where it trended above the channel?
Yes.
What years were those?
That was in 21 before the pullback in 22.
Look at that.
So it got really overbought. And you can see that it was overbought in most of 2021 in the RSI.
So we're there, and last time we touched the upper end of that channel was earlier this year around February. Is that right?
Yeah.
Look at that. Okay.
But look at the RSI. We're not anywhere close to being overbought like we were here. So, and what's interesting is when I compare this to the NASDAQ, we're not at the upper end of this is a 20-year, it's a lot of data.
So the chart you showed before, that was the S&P?
S&P. And you'll notice in 2021, it also got above the trend line before the pullback in 2022. But right now we're closer to the midpoint than we are the upper end of that trend channel.
That's interesting.
It's pretty fascinating, actually.
Is there more stocks in the NASDAQ? How many stocks are in the NASDAQ?
This is just 100. Or maybe a couple more than that, but
so there's fewer stocks in what you're showing here. Okay.
Yeah, but they're all there's more growth represented there than there is in the S&P 500.
Got it. Okay.
And then the one with the most potential upside, if we can get past these treasury rates, if we can get them lower, and I don't know if lowering the Fed funds rate is going to have any effect there. There's a lot of discussion right now about that. But typically that's what happens. You can see that they were at the upper end. This is a small cap. This is a S&P 600. So it's not like the IWM, which has a lot of zombie companies in it. This small cap index pretty much excludes unprofitable companies. So we were at the top of the trend channel in 2021. Then the rate hike started, and it has been spending most of its time below the midpoint of this range. So if there are some interest rate reliefs, that really helps small caps. They have the biggest potential for run-ups.
Very good. Yeah, and if you go back to the S&P chart, one thing I was going to mention was one of the I would say big changes. If you look at 20 years ago and especially 30 years ago, I would say that 20, 30 years ago, the retail investor population wasn't as big. It was like you were better off in many cases to buy into mutual funds, and ETFs are somewhat of a newer thing compared to mutual funds. And why do I say that is buying stocks came with a transaction fee. The access to information wasn't there. Like you didn't have like 50 websites where you can get financials and data on your stocks. You didn't have YouTube where you had other fellow investors, sharing their observation of the market. So, but now there's this new investor class, and it's not like a social statement. It's people that are like really taking their financial future and want an active participation in their financial future. They want to learn, they want to invest, they want to buy stocks, they want to learn how to buy good stocks. Back to these charts, you see that we're trading on the upper ends. You see stocks like Palantir, which has, I would say it's underrepresented by institutional investors, but retail investors are making that stock work.
Right.
And you have NVIDIA, retail investors are making that stock work. You have retail investors that are really changing some expectations. Like it used to be the big institutional players would move the market, and now it's like, yeah, they still can. They're so influential, but retail investors now, and I don't think the genie is going to ever be put back in the bottle, because the good news is investor to investor is being shared better on YouTube, Discord, Reddit. So I think the retail investor is going to continue to flourish, and the retail investor is going to be in a better place going forward. And these charts are showing that, hey, retail investors want to own stocks. They don't want to sit in, they don't want their savings to be in a savings account earning 3 to 4%. It's like, nope, I'd rather, stick my money in stocks and take some chances and earn 25%. That's a lot better. And I want to learn to keep that. I want to learn how to consistently do 15 to 25% every year. And you're not going to learn that if you don't do it. You don't learn to drive a car unless you get behind the wheel, and pick the task you want to do. You don't get better at it by not doing it. You get better at it by practicing it, practicing your art. What stocks do you like? And interesting data. And that's where we're at.
Yeah.
So let's get into some individual stocks. And we're going to start with a big giant company, Walmart. Walmart is, I think, the biggest retailer. Amazon's an e-tailer. And Amazon is a little bigger than Walmart now, but Walmart is a gigantic company at $693 billion in revenue. The market cap's $818 billion. So it's a big, valuable company. Their PE ratio is 38, forward PE 37.35. I happen to think that's expensive because I know Walmart's not a fast-growing company. Analysts think it's a little discounted. Walmart's delivering a good return for investors year to date. 13.53 is beating the S&P, and you get paid a little dividend. Over the 1 year, 39%. That is definitely rewarding investors. 5 year, 132. This has been a good stock for investors. Real good one. Now, this is a safety stock. This is a well-known name. Back to the retail investor. People are comfortable in Walmart. This one here, Walmart's going to be around for a long, long time. Looking at their revenue growth. Now, they announced this morning, and it looks like we've already got the numbers in the stock analysis website. The revenue growth is 4%. Now, that's kind of a passing grade, right? If we're grading, this is not the exceptional student that got an A+ and extra credit, and all kinds of good stuff. No, this is the C student. Solid, passed, we move on. Because it's 4.76%. If you think about inflation, we're at, call it 3%. They're just barely almost 2% above inflation. So this is the kind of stock that me personally, unless it's in a strategic industry, and I don't feel retail's in a strategic industry, I just don't warm up to it. But that's me. Some people probably warm up to it because they're like, look, I like the safety of Walmart. I like the consistency, and they made 132% rate of return for investors over the last 5 years. So, for that investor, this is a good stock, and congratulations. Now, when we look at margins, this is going to be a retailer, so I'm not expecting anything big, and 25% is not big. 25% is when you have the volume that Walmart has, you're going to make money because you just put so much stuff is being bought at Walmart that you're okay earning 4% profit margin on all your revenue because it's just so much volume, so much like healthcare, health insurance payers, and free cash flow 3.67. So these numbers are low, but it's a safety stock. Cash flow has been up and down. Up, down, up, down, up, down, and now it's up again. So it's kind of a moving target when it comes to free cash flow. Now, I haven't been a Walmart investor. I just don't like retail a whole lot. I don't like owning a whole lot of retail, but some investors like it. Let's take a peek at their balance sheet, see what kind of debt they're carrying. Debt is $65 billion, and they have about $9.43 billion of cash. Debt to EBITDA is 1.42, so the balance sheet's fine. And We've got 30 analysts covering the stock. They think it's discounted by a little bit. The highest price target's at $130 per share, and then 91 is the lowest. And the forecast is just consistent growth of around 4%. So real steady stock. Now, if we have sell-offs, this one's going to do all right. It's not going to go down like other stocks. And let me take a look at the 5-day. We've had a sell-off this week, and this stock's gone up. So this is a nice contrarian stock. So, somebody who's in some really good growth stocks that have done great for a couple of years, and you're like, how do I hedge, my downside risk a little bit? Well, Walmart might be a good idea, but it's up to each investor. So that is Walmart. What do you see on the charts?
So they peaked out about 104. So we got a double top here. So they were there in February, and they were there again in August. There has been a slight pullback, looking like maybe it could try to test that resistance again. Their RSI is at 63. PPO is showing it's in bullish territory. There was a negative crossover 2 or 3 days ago, and it looks like we're crossing back over to more bullish, being more bullish. Accumulation line has been lower left, upper right for the past year. Money flow is currently showing bullish. They've outperformed the S&P 500 by 21% over the past year. They're outperforming the staples sector by 32%. The personal products industry by 48%. And that industry group is underperforming the S&P 500. So as you said, Walmart's pretty steady. They've been consolidating pretty much since they come out of the April tariff announcements. They've been consolidating sideways and did break out. Looks like about the 5th of August. And now we're trying to test that double top again.
Yeah, Walmart, they've been around for a long time. When were they founded? 1970. So they've been around a long time. So they'll be around for a long time. I think they do provide retail in a lot of places, and usually in places that need, their stores. So that way people could buy, products at a good price. So that is Walmart. So let's turn our attention over to Palantir. Palantir has been moving quite a bit, and it's had somewhat of a sell-off over the last 5 days. And but this is Palantir, and it has been a rocket ship. It's really gone up from $16 a share up to $156. So investors have been just extremely rewarded with Palantir. It does carry some really, really incredible valuation metrics. This is a $370 billion market cap stock, but it's only $3.44 billion of revenue. So you're paying more than 100 times revenue. That's expensive. That's really expensive. And when we look at their PE ratio, 517, it's like, wow, is this a misprint? No, it's just Palantir. 517 is really, really expensive. Forward PE 209, expensive. So analysts are saying, well, it's expensive. Now, this is from certain metrics. Nobody can argue this is a good business. It's growing. The quarterly is better because it shows the acceleration of growth, 48% growth. That's really good. Now, the one thing I would say is it's kind of a small number. It's not like, oh, they grew a $50 billion business by, 48%. No, it's $3.4 billion business is a good sized business, but it's not big. It's rather small. And the one thing I would put out there is Palantir is a software stock. Strategically in kind of the AI space where they're doing a lot of things with law enforcement, where they're like looking at how they could identify, you know, known bad actors or maybe people that are wanted and so forth. That is neat. Okay, give them that part. But as they expand and start competing against Google Alphabet has products that compete against Palantir. They have BigQuery. They're a big data company. They're all over the cloud. Microsoft also has Power BI, and Microsoft has a big analytics business. Those are huge competitors. And as Palantir gets bigger, they're going to bump up against those competitors, and those competitors are tough. Okay. And they also have competition from other folks like Databricks, and I believe OpenAI is taking a lot of their people and believes they might want to compete against the likes of Palantir. We'll see how things play out, but I think growth is going to be tougher going forward. I'm not a Palantir investor. I'm, in awe of how great their stock's done. And I have multiple members of this channel that are in Palantir. Congratulations. And I have a couple friends that are in Palantir. And my barber, his is funny. My barber, right? He would cut my hair. He retired, but he would cut my hair and he would want to talk stocks. All right, cool. He'd talk stocks. And he was in Palantir. Even my barber was in Palantir, and they all did great. Congratulations. Gross margins are awesome. Profit margins are stupendous. And they're up there. Man, they're profit margins of 22%, and you're growing the last quarter by 48%. That is really incredible. And free cash flow margins really, really high. But the size is where it's like there's a misalignment because they're not that big. Let's look at the biggest software company in the world is Microsoft. And Microsoft is gigantic, 281 billion. They're 90 times bigger than Palantir. So in Microsoft, they have a 15% rate of growth. 15% is a lot. That's like $42 billion of top line growth. 42 billion. Okay. Our friends at Palantir are 3.4 billion. So I'm super interested in seeing how this thing's going to play out. Is this going to grow into its valuation? Because I think most people would agree it has to grow into the valuation. It's not like they're $100 billion market revenue company growing at these rates. They have to grow into that valuation. And they have plenty of analysts looking at the stock. 19 analysts are covering Palantir. Their stock price is $156 per share. The high stock target is $200 per share. The low is 45. So there are people that are looking at the numbers and just saying it just seems like it's overplayed, and there's going to be people like that kind of being bears on Palantir because the valuation is so extreme. They're supposed to keep growing by 30%, and then you see a real increase in revenue of 65%. I wonder what that's all about. Only 3 projections call for that. Profit's going to expand. That looks good. But again, they got to grow into that valuation. And even if I took these numbers 2 years ahead, I can't get to their valuation. It's too high. But I just take a step back and watch, because it is a pretty good show to see a stock like this just do what it's done. It's just been incredible. So before you go to the charts, I'm going to set you up. And I just wanted to say good morning to Carlos, and we'll cover SPSC and then triceps brachii. We're going to cover PGY. Good morning. Thanks for joining. And we'll cover SPSC next and then PGY after that. And it is all yours now, Daryl.
Yeah, so Palantir's had quite a run, and they were trading at 31.82 a year ago. Now they're sitting at 155. Looks like the market's opened, and they're going to trade a little bit higher than they did yesterday, maybe down a little bit, minus 0.03%. They did print that hammer candle yesterday right at the 50-day moving average. We run back. We don't see a 50-day moving average test since April, and that was during the tariff announcements and the March sell-off. Then if you look before that, we see one additional 50-day moving average test. So that may be support. It has had 7 days of sell-offs, but it is right at that 50-day moving average. The RSI is in negative territory at the moment. The PPO is still in bullish territory, but we had a crossover a few days ago. The accumulation has been lower left, upper right for the past year, sitting at all-time highs. They've blown away the S&P 500 by 321% over the last year. The XLK, the technology group, by 313%. The software industry group by 298%. And the software group is outperforming the S&P 500 by almost 6%. So, yeah, if you can stomach the fundamentals from a technical perspective, it's something that is definitely something to be in.
Yeah. And, it's one of those things where, make the bullish case for Palantir. It's going to keep going up because it goes up. And, I can't argue with that because retail investors are buying Palantir. They like Palantir. So it's like, hey, cool. Why is the price of gold where it's at? I don't buy a whole lot of gold. A lot of people like it. It's a store of value. It's a scarce stock. It's a scarce commodity, excuse me. And in a way, Palantir is a scarce stock. Its growth is unique. Its profits unique. So, hey, there's only one Palantir out there, and a lot of people want to own it. All right, so we've got a couple of member requests. SPSC is the first one that I'd like to take a look at. On our way getting there, let me show you the heat map. The stock market's been open for about 3 minutes. It looks like Meta is going to continue to sell off. Amazon's going to continue to sell off. Palantir down 1%. CRM is down 1%. Wow, Walmart's down.
They actually missed on earnings this morning by 6 cents, I think.
Wow, okay. Costco's down. Now, this is surprising that the consumer staples space is down, but it's only 4 minutes into the trading day. Let's let it kind of do its thing. I like looking at it an hour after it's opened. I think that really tells us what are investors buying, what are they selling. For now, it's just it's not a clear picture just yet. So let's take a look at SPSC. SPS Commerce. So I am familiar with this company. I've done projects that involve these guys. So SPS Commerce, they do EDI, electronic data integration. I believe that's what it's about. And what they do is they send and receive orders through EDI. And a lot of that is used in business now. Like, for example, if you ever order a product from a website, it actually gets shipped by somebody else. Maybe you ordered it through a retailer. Let's say you ordered it through Amazon, but the actual manufacturer shipped it to you, and they shipped it from their location. It's likely that Amazon sent an electronic message through its software program to the software program of the manufacturer through an electronic message. And that's what these guys do. It's a standard that's been around for decades, and that's the space they take up. $4.21 billion of market cap, revenue $703 million. So you're paying 6 times revenue. P ratio is high. Forward P is 26. 48% is the price target. So year to date, this puppy is down. Wow, sold off harshly. The 1 year down a lot. 5 year, it was doing well, and then it sold off in a fury. It continues to grow. The growth looks good on the trailing 12 months. Even the quarterly looks really good. 22% looks really good. So I don't know if they've been guiding that, oh no, we think our business is going to do poorly, even though we're doing great. It's going to do poorly in the future, which would be a big surprise if a management team was communicating like that. I think it'd be a big surprise. I'm seeing software stocks just discounted left and right. These guys have a gross margin of 68%, profit margin of 11.79, not bad. Free cash flow 20%. These are good numbers, especially if the stock's been sold off. Free cash flow of 142 million. So this stock's going to be worth $3 to $4 billion based on their cash minus debt. And I'm going to guess that they don't have any debt because they cash flow. Yeah, they have excess cash of 96 million. So this stock is fairly priced. It's priced about right. Yeah, not a big discount because the cash flow isn't very high. The revenue growth is good. Revenue's at 20%. Let's see what their profit margin is. Net profit margin 11.79%. So this is a good software company, but it's not a great software company. Like a Microsoft or a Palantir. They have numbers that are really, really, really good. That's like the A student. These guys are like a C plus, B minus student. They're a pretty good software company. Now, the space. Is this space expanding? I think it is. But there's always a big risk of disruption. You think about the way they're handling messages is they use kind of a standard that's been around for a long time. And as systems get smarter and smarter, now that you have AI, and AI may be the risk here, is you don't have to go on a standard that was made 40, 50 years ago. You could just have these systems talk to one another. Company A calls their product numbers different than company B, but they want to do business with one another. I think the systems are going to get smarter and smarter and be able to just cross-reference each other and just do transactions, naturally just by communicating to one another. Eventually, the standard that SPS Commerce operates on is probably going to be disrupted. I know that from a high level, and maybe the market is trading the stock down because it views that as a legitimate risk to SPS Commerce. So that's what I'm seeing. What do you see in SPS Commerce?
Yeah, they're down quite a bit over the past year, and I've got one or two software companies in my portfolio that the charts look pretty similar. I think people are favoring the AI trade at the moment over standard software companies. So I think they'll recover at some point. Let's see where we are. Currently trading about 110, trading below their declining 200, 50, and 20-day moving averages. Their RSI, I would say, has been somewhat negative since about the end of May or so. Their PPO is in negative territory. They did have a bullish crossover, so people are less bearish on this one as of about a week or so ago. Accumulation has been up and down over the year. The money flow is currently negative. They have underperformed the S&P 500 by 50%, underperformed the technology group by 51%. They're underperforming the software group by 53%, and the software group has outperformed the S&P 500 by 5.8%. So if you own this one, you're going to have to hold it for a while for it to recover, in my opinion.
Yeah, it's not a space that I think is got a big growth catalyst. If anything, it has a couple threats around it. It has been growing nicely, and that is good. It's growing at 20%. That's good. They're a little small, $703 million in a trailing 12 months of revenue, and they do have competitors. SPS Commerce has a couple of competitors already that do exactly what they do. So we'll see what happens. So that's SPS Commerce. It's an okay stock. It's good, but it doesn't have an exciting story to it. It's not like, Palantir's doing, law enforcement stuff. What's another software company that has a neat story? You have anything AI related is really booming, but this one doesn't have a big story. All right, so the next one up that we're going to look at is going to be PGY. And that's Pagaya Technologies. And I am not familiar with this company. So Pagaya Technologies, a product-focused technology company, deploys data science and proprietary artificial intelligence-powered technology for financial services and other service providers. Their customers and asset investors in the United States, Israel, and the Cayman Islands. The company develops and implements proprietary artificial intelligence technology and related software solutions to assist partners to originate loans and other assets. Its partners include financial technology companies. That looks pretty cool. That looks pretty darn cool. So let's take a look at their website. So what is the product? So these guys are using, I think, an AI technology to do what humans have been doing in the loan approval process. Okay. That's my understanding. So Papaya, how Papaya works. Papaya is a network of 31 plus lending partners and institutional investors. You integrate your origination system with our network through an API. This is an integration. You approve more customers in your brand experience and service them while Pagaya facilitates the transition of the loan to the appropriate financial vehicles. So you apply for the loan. So this is helping lenders go through the application process with less human touch, less expensive. Those are good things for the lending company. They're going to reduce their cost, and that would be good. This is really interesting, and this is the kind of stuff that I've been somewhat seeking in AI, which is show me AI that's actually creating a really good business benefit, and this may be an example. So let's keep looking. All right, so I'm going to go to the investor relations page, kind of get. Let's see if they have a nice presentation. It looks like we have a new member. Let me take a look here. Yeah, Justin Tucker. Thank you so much. Awesome for you to become a member. I appreciate that very much. And you want to look at AMPX? Absolutely. AMPX. And then we've got Angel Lara. Good morning. You want to look at Credo. Yeah, you got it, Angel. If you're a member, you get to request them. If you're not, a $5 super chat. So if you'd like me to do that, please take one of those options, please. Okay, so Pagaya Technologies. Have you heard of this company, Daryl?
No, this is a new one for me.
All right. So this is kind of a visual of what they're doing. And of course, you got these new generation companies like SoFi. Ali's somewhat new. US Bank is established, and Klarna, excuse me. I'm not sure what they do. I think they're new. Okay. So this is a good idea. Seems like a good idea. And what I'm trying to do here, right, is when we look at stocks, they're a ownership in a company. Now, one of the important questions as investors is we have to form a qualitative assessment of the business. Is this a good business? Is it interesting? Do we think it's going to continue to grow in the future? Do we think it's terrible? It's going to crash and burn. That's what I'm trying to do here is just kind of get familiar with their business and form, a high level opinion on what's the favorability, what's the desirability of this business. So that's what I'm trying to do here. Okay. So this is how they make their money. Okay. So they say they have a data moat. Okay. And here's lending partners. Okay. Okay. So I'm in the game. I understand their business. Let's take a look at their fundamentals. I like their business. I think it's interesting. The stock's moved. Wow. Look at this chart. Holy smokes. Now, I stay away from IPOs for this reason. This is an interesting business. This is a neat business. And it IPO'd, kind of like the way you've seen Figma recently, or Circle, or CoreWeave. They do this, and then they torture investors. They got psych, and then slam. Oh, no. But the 1 year, if you wait a while and get more information, more financials released, you could see that, hey, this is a quality business, and the market's really buying into their business model. 136% rate of appreciation over 1 year. It's a $2.3 billion market cap, $1.15 billion of revenue. So not bad. You're paying 2 times revenue for a business that is in a good space. Forward P is 10. That's a really good, affordable stock. All right, let's take a look here. So I'm going to be looking at gross margins, and that's going to be important because this is a new business. They're young, they're growing. They don't have to be profitable. But I want to make the assessment of once they become bigger and they have big scale, are they going to be really desirable? If they have high margins, the answer is yes, because once they become a big scale player, they're going to be making gobs of money. So revenue is growing at 24.5%. That is not overly exciting, but it's good. They're little. So I thought they'd be growing by like some crazy, 100% or so. They do free cash flow. Looks good. Gross margins of 42%. For a business like this, that's a good gross margin. Why do I say that? Is they're taking systems, right? They're basically doing this off big data. And when an applicant comes in, they're getting data from the partner. Let's call it SoFi. And, Joe Smith is looking for a car loan. Boom, takes Joe Smith's data and in essence makes a decision. And are they credit worthy or not? All that happens. These guys are going to expand their margins over time when they get bigger. But for now, they're having to pay their cloud infrastructure cost. That's pricey. They're probably buying, the very good and expensive technology. Okay. Got it. And I would expect that their margins will expand in the future. For now, it's an acceptable margin. The stock is interesting from a business perspective, but it may be overpriced. It's $115 million free cash flow company. I'd probably want to pay. Actually, this stock's looking good. So if I went 30 times 115, it's going to get me to about 3.5 billion. These guys are at 2.31 billion. Let's make sure they don't have a bunch of debt. So they do have some debt, $559 billion debt. I'm going to take a look at their actual balance sheet in a bit. So see the debt to EBITDA? It's high. Why do they have so much debt? Let me make sure that I agree with that debt number. Okay, so long-term debt is 296, and then they do have some notes there. So 296 plus 147, so we're up to $443 million, and then another 100 million. So they have debt. So this is a bad thing, right? This is a negative. Is it a super bad risk? No, but it's a risk. So I like the business. I like the concept. I don't like their balance sheet. Their balance sheet has too much debt. Their growth rate is not incredible, and they're small. It should be more incredible. If their AI technology is working, I don't see why others wouldn't be like buying it as fast as they could. If you're Chase, right? JP Morgan Chase, and you're like, oh yeah, we have this group of 40,000 employees that are doing this aspect of our business. Oh, we can use Pagaya technology and reduce cost by 25%. They would do it in a heartbeat. They'd be like, we're all over this, because if we don't do it, our competitors will. Having said that, that's why 24.5 for me makes me feel like, well, customers are not like breaking the door down trying to buy this solution. They're not trying to partner with you that fast. So it's the business isn't overly impressive. So it's a good stock to watch. It's a neat use case. The fundamentals support the stock price, but it's a risky stock. The debt makes it riskier. And for me, it would be a good watch stock, but it's not a buy stock. And that's my observation of it. What do you think, Daryl?
So I went back and looked at the same data you looked at, and there's the IPO got up to about $414, so it was way up there, and it looks like it got as low as I don't know, $6 or so. They did have a reverse split, it looks like, at one point.
Mm-hmm.
So they've been pretty flat up until about May, and then they've really shot up 164%. Currently trading at around $30. They are trading below their declining 20-day moving average. They're above an increasing 50-day moving average and 200-day moving average. RSI is pretty much dead in the middle. PPO is positive and has been since the beginning of May. They did have a bearish crossover at the end of July. Their accumulation distribution has been flat up until May. They are outperforming the S&P 500 by 110%, the XLK by 105%, software industry group by 97%, and the software industry group is outperforming the S&P by 5.75. So the chart looks pretty good. Looks like we're trying to consolidate here around this pricing.
Mm-hmm. And one more thing I wanted to show on Pagaya is see their growth, their expected consensus growth is going to slow down. See that just shows me like if you have like a new technology that is, changing the game, disrupting some other industry, the market starts buying that solution like crazy. They're like, man, get me, like Nvidia, right? They started buying the GPUs like crazy, and Nvidia stock, their revenue shot up. Well, we're not seeing that. We're seeing that, hey, it's expected these guys are going to slow down. So it's like, huh. So their margins aren't overly exciting. Their revenue growth isn't exciting in the future. Well, what is this really? Is it really AI? If it's transformational, it's going to reduce a lot of cost out of the lending process. It should be super exciting, but it's not. So this is where I understand the big picture, but the data is telling me, hold on a second, this is not being bought by the market like crazy. So I'm going to watch the stock. I think it's neat. I think it's a neat example, but the fundamentals are telling me do not put capital to work here. So I think it was one of, let's see who asked about it. So thanks to the members that showed up. I think that was Triceps Brocky. Thanks for joining. Thanks for asking about PGY. And Carlos, thanks about asking about SPSC. Now we got a brand new member, Justin Tucker. Thanks, man. Little J, we're going to get to your comment in a few, and you want to potentially look at MU. So give me a second here. Shadow Guy. All right, Little J. So Yeah, you want to look at MU, which is Micron. We can look at that. We're going to look at it after AMPX. AMPX. So AMPX is Amprius Technologies, develops, manufactures, markets lithium ion batteries for mobility applications. The company offers silicon anode lithium ion batteries under the SI Core and SI Max product platforms. Its batteries are primarily used for existing and emerging aviation applications, including unmanned aerial systems such as drones and high altitude pseudo satellites. The company was founded in 2008 and is headquartered in Fremont, California. Okay. Wow, it's doing really well year to date. 1 year. This is like, wow, look at that, the 5 year. I guess they IPO'd back here again. Why? I'm very careful with IPOs. Good business, interesting concept, but it seems like the stocks when they IPO, they're released into the casino stocks and everybody trades them and prices go crazy. And then reality sets and stocks sell off.
Based on the price, I bet it was a SPAC.
You're probably right. But the 1 year, look at that. This one would float anybody's boat. Even Palantir stocks would be like, Palantir stockholders would be like, hey, this is an acceptable rate of return. Market cap 830 million. Even after a 500% increase, these guys are 830 million. Market cap. Revenue 44 million. Okay. Now we'll look at the growth in a bit. It's a strong buy with a 90% discount. So remember how I was saying I was underwhelmed on growth rate. Now this is a tiny number, but man, I don't see 260% growth every day. And I don't see 350% growth every day. So these guys are okay. They got my attention. They're small. Okay. They're tiny. Let's look at their margins and stuff. So they are, so they're losing money on every unit they produce. Okay. They sell something for $44 and it costs them $53 to make it. So they're like, okay, we just lost $8 just on the product cost. That's on materials, direct labor, direct overhead, principally the prime cost. And then they have to pay for their accountants. They have to pay for the HR department, the janitor, the office space. So they're losing a pretty good amount of money. Let's look at their margins. Oh, we can't look at margins. Oh man, this is oof. This is a zone that I am uncomfortable in. Now, I don't have enough information to make a good decision because if you told me, hey, this product eventually, or we should have margin on it of like 60%, then I could say, well, when they scale up, they're probably going to be worth about this much. But so far, these guys have not proven even to have a gross margin. So it's really risky. They're small, so risky. And when you talk about batteries, okay, I'm not an engineer, and this is more of just observing the economy globally. The companies in China, they really know battery technology. So Amprius is going to compete domestically in the US, trying to be the technology leader for batteries. But you better believe over in China, there's a good number of companies that are like, we know that market. We know that technology really well. We produce really good batteries that go into the products that Amprius is selling into. How long have they been around? So they've been around 2008. So that is 17 years. That's a long time. So that's also a concern for me is if you had an awesome idea, you should be a lot bigger by now. So this one here is a pass for me. There's just too much risk. I think the concept has really been grabbed by the market. Hey, these guys do batteries and they're going to do really well in the future. But this stock's really tortured investors for a couple of years, just destroyed their capital, put it into the capital furnace and burned it. Going from $12.50, it got put in the furnace and they were able to just rescue 71 cents per share. And then that stock went up. So this one here is a pass for me. I just don't see the path forward that has profit. I see that the competition in batteries is going to be intense for these guys. Again, China is really good at making batteries. Most of the batteries that we see that we have in EVs are coming from China. China really has a lot of, they might be the leader in battery technology. So those are my comments on Amprius. What do you think, Daryl?
SPACs are on their way back so everyone knows, just be careful with them. They don't have the best reputation in the world. So over the past year, they have performed okay from $1.09 to $6. RSI is negative. PPO has been positive since I'd have to go back to beginning of May. Did have a bearish crossover in July. Accumulation was pretty much flat up until the 1st of July. Money flow is currently negative. They have outperformed the S&P, the industrials sector, and whatever DS is, industrial suppliers, is the industry group. They have outperformed that. And that industry group as a whole has outperformed the S&P by 3.3%. So the technicals look okay, but the fundamentals would make it a no for me.
Yeah, it's, qualitatively, like when you make investing decisions, right, there's the numbers. Those are like kind of like the science of what we do. You look at numbers, you discount those numbers to net present values. Okay, great. But then there's the qualitative. That's the art of what we do. You got to look at the big picture, assess, are these guys inventing something that is in huge demand and is going to just get bigger and bigger and bigger? Now, I would say that, yeah, batteries are important, but their competition is going to be pretty extreme, especially coming out of China. All right. Thank you for asking on that. I hope you found those comments interesting, Justin. And thank you for becoming a member. It's great to have you. Please get me your email address by emailing me at victorhinvesting@gmail.com. And for you, and we had another member join, and the new member was Arbola Project. And anybody who's a new member or a member that hasn't done so, please email me so I can get you all the perks of a paid member. And want to make sure you get all the value as a paid member. All right, so we're going to turn our attention over to Little Jay's request to look at Micron. Micron is within servers and data centers. You definitely have a CPU. We can think of AMD, Intel. They're the leaders of that CPU. You have a GPU, graphical processing unit, which accelerates the computing power and makes a computer able to handle extreme workloads, or maybe handle a workload really fast, accelerated computing. GPUs are in high demand because AI, these large language models are massive, and you need like the fast processing that GPUs offer. In that server, you also have memory that's accessible immediately by that server. That's where our friends at Micron operate. They operate the memory. Now, what's important to know about Micron is they're not in the most desirable part of the ecosystem of semiconductors. They have two big competitors. One of them is Samsung. Samsung is massive, competes directly against Micron. And the other one is called, I forgot, but it's a pretty substantial Chinese competitor. So it develops, manufactures, sells memory and storage. Okay. And they are in the US, they're in Idaho. I'm familiar with the company. They've been around for a while. Their revenue's been great. 1 year, 8%, year to date, up 39%, 5 year, up 172. And you've seen these pullbacks. Look, this one was severe. It went from $141 a share, geez, down to 64. And their sell-off started before everybody else's, right? Theirs started in June. Wow. That must have been just a really rough ride for investors. But since then, it's really gone up. It's almost doubled. So market cap, 131 billion, not too big. Revenue is 33 billion. Okay. And current P is 21 and forward P is 9.76. Growth is good. Now, this is a cyclical industry. You see it. You see how they have growth, contraction, growth, contraction. That big contraction, by the way. Half their business went away in 23, and then growth. They're in the growth cycle, but I forecast a contraction in the future, maybe a year away. When we look at the profitability is where this one does not have the same characteristics as an NVIDIA. Gross margin, 37, right? Let me open up NVIDIA and show you what highly desirable. Oop, 1 second, guys. I just spilled some water on my keyboard. Let's see if this wireless keyboard can handle a little water. All right, so maybe I'm going to flip it over to you and try to drive my keyboard.
Okay. So over the past year, looks like they're only up about 10% or so. They did have a big drawdown in April, just like every other company in the market. They are up 82% since that low, after being as high as 101%. They are trading below looks like a declining 50-day. It could be flat, but it looks like it's declining to me. The 20-day is increasing, and the 200-day looks pretty flat. It is trading above that. The market sentiment seems to be pretty much right in the middle. RSI is sitting right at 49. The PPO is in bullish territory after crossing over into bullish territory on the 8th of August, so 2 weeks or so ago. That momentum is decreasing. Looks like we could have a bearish crossover. Accumulation really started after reaching a 52-week low on the 7th of April, has been on a steady increase since then, as are the money flows. These two indicators are related. The company is underperforming the S&P 500 by 4.5%, underperforming the XLK by 6.3%, 4%. Underperforming the semiconductor group by 15%, while the semiconductor industry group is outperforming by 13.5%. So a little bit of relative underperformance there, but overall the price is pretty much where you would expect it to be.
All right. So thanks for handling that, Daryl. Sorry, everybody, for the technical issue I had on my side. And coincidentally, we are going to test Logitech's keyboard water resistance capability because I tried to dry it as much as I could. And either it's going to work or I'm going to get a new keyboard later today. We'll see what happens. Let's fly by the seat of our pants here. All right, good so far. All right, so NVIDIA, this is what I wanted to show is Micron has a gross margin in the 30s, I believe. This one here, so gross margins in the 70s. So back to Micron. So when we look at Micron, they're not selling the product that has the best profitability. So just be aware of that. It's like, okay, we don't want our expectations to be unmet where, hey, they're growing. How come, they're not making enough money or their stock isn't rising, right? So you see their profit margin has really gone up and down. It was really bad in 23 and barely making a profit in 24. Now they're back to making a profit. Free cash flow margin hasn't been great. Free cash flow is inconsistent. I don't like inconsistent numbers, and these guys certainly delivered. Where again, NVIDIA, right? This is kind of like the gold standard. Free cash flow exploding, just taking off. Profitability exploding. So that explosion that NVIDIA is exhibiting because of the AI data center build out is not what Micron is about. So they get put into the semiconductor space. They should be. They're part of it. Got it. And they just have a different valuation. That's why these guys are valued at 131. Let's see if they have any debt. So do they have any debt? They have a little bit of debt. No big deal. That's not much. 4 billion, debt to EBITDA 1. Yeah, we're fine on the balance sheet. The forecast, let's look at the forecast. So we have 28 analysts covering it. They think it's 30% discounted. That's a lot of opinions. And you look at this growth. See, this is what I'm talking about with semiconductor. Go here. And this year, we're already in their fiscal year 2026. No, we're about to start. Excuse me. We're about to end fiscal year 2025, growing at 50%. It's going to slow down, then it's going to really slow down. Okay. So this is going to start affecting the stock price soon because the stock market looks 2 years ahead. Stock market's like, what's going to happen down the road, a year or two from now. So as these numbers start to get put into valuations, and you're seeing growth go from 50 down to what? It's going to be single digit. Sell. So that's a concern I have on Micron. I think I have a valuation on Micron. Kurt, good to see you. Tomas, great to see you. I don't cover Micron because when I cover it, I just can't get a good valuation on it. And the reason for it is the fundamentals, they don't have consistency. When we look at free cash flows as an example, am I looking at the right? So we got income statement. Okay. So here's cash flow. Look at this chart. What's going to happen next? I don't know. These guys are up, down. It's like all over the place. So the data doesn't give me confidence. Like, okay, is it going to be 1.8 or is it going to be 500? It's hard. So you could take an average, and when you take an average, the valuation goes way down. It's not a business that's showing that we're just continuing to almost compound our success. We are looking at, a business that grew by 30% this year, and then next year they became even 25% bigger. That compounding creates a big business. That's not Micron. And the cash flow is not expanding over time. Back to NVIDIA, right? If we look at NVIDIA's free cash flow, it really expanded, right? It went from low number to really high number. So this is what we want to see, is upward chart with some consistency so we can have confidence in the data. So David Tepper bought into Micron. David Tepper is really, really good. But like when I look at super investors, I don't copy exactly what they do, because in some cases I don't understand or I don't believe in the stock. And that's one of them. He's temporarily probably done well, but it's not a stock for me. I've looked at Micron a few times, and it's not the right stock for me. The two stocks I like in semiconductor are A-Lab and Qualcomm. Maybe I could show you those. If you want excitement in your life and you're like, you know what?
Give me the desk for a moment. I can show Micron in fast graphs because it's pretty painful.
Go for it. It is yours.
Yeah, if you look how painful that is, that just shows how what a seasonal business it is. And every time that their sales decrease, the price always follows that. Right now, Fast Graphs is showing that they're a little undervalued by about 3 times the fair value, 5 times the fair value, and maybe 9 times the normal PE. But I don't see it trading at the normal PE when it's doing well. It only trades above it when they're doing pretty bad. So I wouldn't really use that number.
Yeah.
Too much. So it looks painful to me.
And this is the kind of stock that it looks good for a couple quarters, and then it tortures investors. Like, exactly. Oh no, it's going off a cliff. So buyer beware on that one. We're going to finish our thoughts on Micron. We're going to cover Oprah, and then we're going to call it a day. And then I'm going to stream later today, and I'll see if Daryl's available tomorrow morning to do the same format. But I was getting back to, if you like semiconductor, want to be in semiconductor, I've got 2 choices, or I should say 2 suggestions out there. If you want excitement in your life, Astera is going to give you too much excitement. This is kind of like the Red Bull of semiconductors. It really takes off. It's up 34%, but boy, it's really gone down, offered a nice price, and then it's really gone up. And today it is up. If we look at it later today, it might be down. This is really volatile. But what do I like about A-Lab is it's small and it has incredible growth. Okay, this is incredible growth. And they're a pretty good sized business. And these guys are right next to NVIDIA technology in that server I was telling you about. These guys do the best semiconductors for communications. So this is an exciting stock. So if you want, I want growth, man, but you got to wait on Astera Labs because they're priced too high. That's what happens when these stocks are small and they get overpriced really fast. I'm waiting for it to settle down a bit. I'm actually selling some of my shares at a big gain. Like today, I'll probably sell some more shares because it's overpriced. And I'll show that to you real briefly. And the other stock I'm going to show is Qualcomm, because but let me finish Astera. So Astera right now is priced 32% too high. It just went up super fast, but it has great value. Okay, so the other one is Qualcomm. Qualcomm is discounted, and this is growing. This is a growing business. It's just not in the not in the VIP section of semiconductor right now. It's not in the cool part of campus. It's just the business is growing, making a lot of money, high margins, high free cash flow, discounted, and it pays a nice dividend. Okay, so let's talk about Opera. Tomas is on the stream. Tomas, good to see you. Kurt, great to see you. And Kurt's got a comment here. Let me cover that before we move on. So, Kurt, I've got a Micron Windows 95 desktop PC gathering dust in my basement. Paid $2,100. Yeah, exactly. My first PC, I paid about that price in 1991. And man, I thought I'd won the lottery. Oh my God, I have my own PC. And I went to town. Back then I didn't use Excel. Remember Lotus 123, Daryl?
Absolutely.
It was all character based.
Yeah.
WYSIWYG and all that good stuff.
Yeah.
So right there with you, Kurt. I paid more for my computer than I paid for the car I drove. I drove a little truck in those days. Got myself to and from university. All right, Opera. Good to see you, Kurt. So Tomas, yesterday evening we had the investor call. We talked about Opera. I don't know that you were on. My memory tells me that you were not on, but I could be wrong. And so it's interesting that you're bringing it up. So my conclusion on Opera was that it's a buy. There's just too much good stuff going on with this business. What do I mean by that? So they do a browser. So they produce a browser, okay? And I actually had this thing queued up. They do a browser similar to Chrome, and they're out of Norway. And okay, well, you got this Google Alphabet browser, Chrome, that's dominant. Got it. And all those things look, this looks like it might be a niche. They might be able to sell into a niche. So when we look at the fundamentals, you have a growing business growing at 30%. It's not the biggest business in the world. It's $554 million of revenue, but that's pretty good growth. And you have good margins. Gross margins of 52, expanding as they get bigger. They're going to expand that gross margin, and free cash flow is there. So when I value Opera, it is discounted by 57%. Now, when's the market gonna like software again, especially like software companies like this that have good fundamentals? I can't answer that question. I could just say that Opera provides a discount based on their fundamentals. And that's what we concluded last night. It's fresh on my mind, so that's why I could just jump right into it. And Opera looks good. It's actually on my buy watch list. I'm looking to get into it and start a small position. I'm a big Google Alphabet stockholder. Do I think Opera is ever going to replace Chrome? No, but I could totally see it establishing a nice little niche. The other thing too that is an interesting idea is you see it acquired. You got OpenAI and other AI companies saying, "Oh, we need to have our own browser because when everybody uses Chrome, we know Google Gemini is our biggest competitor." Well, that's our competitor forcing us to use their technology. We'd rather have our own browser. Well, go acquire Opera. and you got it. You got it. So their market cap is 1.4 billion. So go pay $2 billion or $3 billion for it. And you got a functioning browser. You're good to go. So that idea is out there. So Opera looked good to us last night. It looks good to me. I put it on my buy watch list. Duo. Okay, let's see here. Do you want to check Duo? We talked about a few calls. So Duolingo, and Duolingo is really, really exciting, right? I didn't. I don't have valuation for Duo, but let's take a look. Is it Duo or it's a different ticker? This is it, Dual. Okay, got it. So Duolingo had a really stupendous. No, it had a sell off. I'm getting my stocks mixed up. So it had gone up. It's come back down. $15.6 billion market cap, revenue 885, high PEs. They are growing. This is the learn a language.
Is that the one Thomas wants to look at? I see DUO, which would be Fandango.
Duolingo or Fandango? Duolingo, right?
Duolingo has an L at the end of the ticker.
And which one?
Duo
Uh-huh.
is FanGDD Network Group. Which one are you asking about, Thomas? Duolingo. Okay, so put the L on it. Yep, thank you.
All right. So really good growth. These guys were, the AI paradigm is supposed to put them under stress of potentially being replaced. But they're like, yeah, whatever. We keep growing at nearly 40%. And free cash flows there. Gross margins are there. This looks good. So this business is easily worth 12 to 15 billion minus debt. They have $1 billion of cash. So yeah, they're priced about right. They're priced about right now. It's not discounted. I think the risk or the threat of AI is going to be there for these guys, but if they keep operating at this level, you're buying good value. If the stock price can come down. Right now, I think they're fairly priced. Analysts are saying that it's priced 31% too low, that there's a 31% discount. Analysts are saying that 22 of them are saying it's going to keep growing in 2026 and it's going to keep growing. Yeah. So Duolingo is not ready yet. I think it's fairly priced, and it's a small stock, right? So I got to get a good discount like Opera. Opera is offering a pretty darn good discount. This one's not offering a big discount yet. So thanks for asking, Tomas. Good to see you. Hopefully you're having a good day. Jorge Rios. I held Micron for a year. Was one of the most painful. Yeah, I'm here. I'm right there with you, brother. All right. So let's take a look at the market and then we're going to move on. I've got to get my business day started. Markets are a little negative, not too bad. July home sales rise. Okay. And when we look at the heat map, it's looking different than yesterday and the day before. Google's up a little bit. Meta's still down. Meta's had a pretty good little sell-off this week. Amazon sold off this week. Walmart's still down. We've got Microsoft, NVIDIA going up a little bit. United Healthcare is beginning that rise to double in price. Up 1.27%. Maybe on our next stream, we could take a peek at United Healthcare. So heat map's looking a little different. I think everybody's waiting for the news tomorrow.
Yeah, I think you're right about that.
Yeah. And last comment is looks like so far the Logitech keyboard wireless passed the submersion test.
Okay, put a check in the pro pro side of the pro cons list.
Exactly.
They make
So
good products. I like Logitech products.
I do too. I do too. I mean, it's awesome to see peripherals like they're just bulletproof. Isn't it amazing that like they just work? It's
Yeah.
like if you get a bad product every once in a great while, it's like, wow, that's a big surprise because they just work. And in
Yeah.
this case here, that's the first time I've spilled water on a keyboard, I think. My biggest worry is my laptop, right? It's got an integrated keyboard. So
Yeah.
I got to be careful not to spill a cup of coffee on that because that would be an expensive experience. All right, Daryl, thanks so much for joining me. Thanks everyone for joining us. Really good stream. We had
Yes,
a
it
lot
was.
of good questions, and we have a lot of members on the call. I really appreciate all of you. We have 2 new members, Justin and Arbola Project. Thanks so much. Again, get me your email address. You just email me at victorhinvesting@gmail.com, and I'll take it from there. I'll make sure you get signed up for all the perks. I appreciate it very much. And please support Daryl's channel. He's got a channel. And if you can subscribe to his channel, that'd be awesome. You get to see more of Daryl, which is, I think if you do that, you're going to learn a lot. So that is it, sir. I wish you a good day, and
Thank
I'll
you,
check in with
Victor.
you later.
All right, Victor. We'll talk to you later. Thank you, everyone. Have a great day.